tag and identify what comfort level you have in terms of contact. And you can certainly wear your mask during the meeting and remove it when you're speaking, so we can speak into the microphone. But other than that, welcome to the first in-person meeting, and it's so nice to see everybody. Melissa, can we go ahead and do roll call?
Sure. Ms. Avila Farias?
Here.
Mr. Cervantes?
Here.
Ms. Gallagher? Ms. Gallagher is absent. Dr. Imbasiani?
Present.
Mr. Hunter?
Here.
Mr. Starr?
Here.
And I should say Mr. Starr is the delegate for Treasurer Ma. Director Velasquez?
Here.
Secretary Castro Ramirez?
Here.
Mr. Prince? Mr. Prince is absent. Ms. Sotelo?
Here.
Mr. Acefa? Mr. Acefa is absent. Ms. Miller? Ms. Miller is absent. Ms. Johnson Hall?
Here.
Madam Chair, we have a quorum.
Wonderful. Thank you so much, Melissa. Board members, you have before you the March 17th meeting minutes. If you've gotten a chance to take a look at them and have any changes, let us know now. If I don't hear any changes, we'll go ahead and adopt those minutes. So let me just give you a minute or so to take a look in case.
Move to approve.
Great. Okay, so if there are no changes, that's great. So do we have a second?
Second.
Wonderful. So those minutes are approved. Oh, I'm sorry, Melissa, do you want to take roll call?
No, that's
No, okay, you're
okay.
good? Okay, wonderful. So next on our agenda is the chair report and the ED report. We always look forward to hearing from Tina. She's so wonderful in terms of her updates. One of the things that, just from the chair's perspective, one of the things that I would love to do is give the opportunity to our department agencies that sit on our board, just give them an opportunity to create an update or let us know what interesting, exciting things are happening in your departments. And that way we can have an opportunity just to hear from you directly. And we can either handle it as a spotlight on the department. So we'll have a standing agenda item on the meeting, during the meeting, where we could just hear a spotlight from, let's say, Mr. Velasquez, just to hear what they're doing. Or we could do a round robin update. So I will leave it to the departments to decide that, but for our next meeting, we will have a standing agenda item that gives you the opportunity to just say hello and tell us what you're doing. And then as board members get to know your departments a little bit better, maybe there's an opportunity for, crossover and interface and an opportunity for CalHFA to support the work that you guys are already doing. Okay? So I think that, for me, is the only, report I have on the chair side. With that, I'm going to go ahead and turn it over to Tina.
Thank you. Do I say chairwoman, or how would you?
You can call me Delilah. No, you can say Madam Chair is fine. It's good.
Madam, thank you, Madam Chair Sotelo. What a wonderful and creative idea. And I would like to, in that regard, make a suggestion, because there's something really important that Director Velasquez is working on right now, which is the statewide housing initiative. And I think, hate to put you on the spot, Director Velasquez, but it's so important to us as well as the community at large to hear some of the results that your wonderful staff has been working on. And so, if you don't mind, I'm going to ask you to be first up.
Of course.
And so, as most of you know, I had my confirmation hearing in front of the Senate Rules Committee yesterday, and it went well. I'm just saying that because my staff wrote that, but I felt really good.
I will say yes, it was exceptionally well done. So congratulations.
Thank you.
Let's give it
I do want to thank everyone who sent in letters of support, but especially the staff that helped me to prepare. Too many to say all of their names, but a couple of standouts that I just could not have done this without them, who held my hand throughout the process. Don Kavir was one of them. Chris Sauer from our communications team, and Frances Marti literally met with me every day, sent me emails and so forth, and I have no words to thank them outside of what I'm saying today, but it just really doesn't capture the spirit and the effort that they put into ensuring that I did well, so I thank them with all my heart. I also want to thank Secretary Lourdes Castro and members of the BCSH team above and beyond, as well as the governor's office staff who really, really went out of their way to make sure that I put forth the best effort that I could. So I'm really feeling the love today. Can't nobody tell me nothing. And I'm just so happy to be here and now really ease into this role in a way where I know that not only do I have the skills, but I have folks who have my back. So thank you. So the Rules Committee did affirm my appointment as Executive Director with the unanimous vote. And there's now just one final step, which is approval by the Senate during a floor session, which we expect will come in the next few weeks or so. So, on a related note, I also wanted a moment and just acknowledge something that has been crystallizing for me, and something that I was really thinking about as I was going through the confirmation prep process. I've been here as the Executive Director now for a little less than a year. But as all of you know, I've been working with CalHFA on the board for even 7 years prior to us, so I have a little history with this team. And in that time, we absolutely have made a huge shift in terms of the wider perception of CalHFA and what our standing is in the state. We have also been recognized as we've always been recognized as a subject matter expert, as a practitioner of affordable housing and home ownership. But I really think that it's a little bit like that's been our niche, and people kind of saw us as that little tugboat that helped other organizations. But I really do feel in the last few years as though we're going to the next level, where we are not only seen as a subject matter expert, but as a leader and an innovator. And even more than that, the administration and the legislature are depending upon us to achieve some of the state's most important housing goals. This is not brand new information, but it was sort of a revelation for me as I was kind of going through the process that I wanted to share with you, and there's some reasons why. So think about this. When the state wanted to prioritize production and mixed income housing, it sent us funds through Senate Bill 2 and AB 101. Wow. Okay, then right after that, we were allocated national mortgage settlement funds for housing counseling and mortgage assistance. Governor Newsom did negotiate a deal with Apple, and then we were able to work out some details and find innovative ways to use the Apple investment. And then the legislature and the administrator wanted to allocate funds to finance ADUs and home ownerships, up to challenge the supply issues here in the state of California. We were right there to help run those programs. And as many of you know, there is a current bill proposed, which quite a significant amount of money for first-time home buyers. And once again, they're looking for CalHFA. We were actually named in the bill. And that's not to mention CalHFA being chosen to administer the $1 billion allocation of federal homeowner assistance funds for mortgage relief. I say all this to acknowledge this new position within the state's housing leadership and to let the board know that we are up to the challenge. We're going to do this. We're going to do this in ways that we have not done before. But I also want to recognize that it is a challenge for us. We don't have all the answers, but we have some of the most talented people that I've ever worked with working here. And we're going to need your guidance. We're going to need your support. We're going to need your expertise more than ever before as well. So we'll navigate through these waters with your help. It's a challenge for us, but we are up to it, absolutely. One of those programs I do want to touch more into, and it's our ADU financing program. So I will give you an update on that. As the board has heard, we have spent some time designing the brand new program, and the past few months have been spent really working on with our partner lenders to get them onboarded and to set up the delivery system for the new product. As of now, as of now, we have 8 lending companies around the state, each with various branches offering the ADU financing. We believe now that we are at a point where reservations will now start to come in regularly. And to that point, we have 9 reservations on the books. That doesn't sound like much, but we were at a White House briefing earlier this year, and I think they had done 12 in 2 years. We're gonna fly. How much many? And we have 12 now. Wow. In just a few months. To me, that shows that the outreach is working. The program is working. While we have some work to do to get this fully launched and fully implemented and with the regional touch points everywhere, we're on our way. This is going to be something that I think will be a nationally recognized program beyond what we've ever done. I also want to mention our other program that was launched earlier this month, which is the Forgivable Equity Builder Loan Program. Folks in my office have heard me say this is the game changer, and I really do believe that it is. The program generated a lot of attention through our initial social media marketing, especially when I mentioned it during the recent Housing California conference where I shared the stage with Director Velasquez and also a member of the BCSH team, our housing person.
Deputy.
The housing deputy.
Yes.
It was such a wonderful event. But believe me when I tell you, people were running to our table. We literally ran out of pamphlets. So I think people are really hungry for a program like this, where we are providing 10% of effective grant funds of the purchase price of these units, which will then in 5 years be 100% forgiven if they remain in the home. 10 years, I don't know about y'all, but 10 years of equity in a home means a lot in California. But for the folks that we are targeting, it means a path to intergenerational wealth. That is the game changer. So, our marketing and outreach strategy going forward now, we're going to, while we're focusing on all folks, we are strategically going to be in collaboration with minority lenders and other organizations like NARAB and KRAB. These are the National Association of Hispanic Real Estate Professionals, as well as the California chapter of the National Association of Real Estate Brokers. And later this month, one of our Congress women will be hosting Aquila, somebody help me. I shouldn't have brought it up because I couldn't finish her name. Forgive me, Aquila. But one of our congresswomen out of San Diego will be doing also a joint webinar with the Urban League. So, thank you from San Diego. Jonathan saved me. But I think that we'll be able to touch a lot of folks in this way through our collaborative efforts with these very highly respected organizations. With the buzz that we have already generated, the targeted outreach strategy that we are implementing, I'm loving that this program is going to gain even more traction than what we've seen to date. So with that, I will hand it back to Chairwoman Sotelo. Thank you.
Well, board members, I don't know about you, but I'm completely inspired by Ms. Johnson Hall and her wonderful vision for the agency. So with a round of applause, let's affirmatively tell her that we're on board and we've got her back. And your deep experience in the lending community and always through the lens of equity, I think is inspirational, and I think will really lead us to having the conversations that we need to for all Californians. So greatly appreciate it. Thank you very much, Ms. Tina Hall.
Madam Chair?
Yes, please.
Can I just make a
Yes.
couple of remarks? First of all, you are on the other side now, having completed the confirmation hearing. And I was listening to this song by John Baptiste, Freedom. So if you haven't listened to that song, you should listen to it because it is refreshing once you get through the confirmation process to be able to really solidify, right, your place and your leadership within CalHFA. And I just wanted to say that the governor is deeply proud of what you have achieved in the last few months, together with the team at CalHFA, and together, of course, with the board. And as you mentioned, right, there is great momentum at CalHFA, but you also have worked to create and develop new innovative approaches to strengthening the housing ecosystem, as you call it. And you're absolutely right, Tina. This is not easy work. We are trying to address housing affordability and housing access issues that have been 30, 40, 50 years in the making. And the way that we are going to make an impact and the way that we are going to reverse course is by continuing to be collaborative, coordinated, and innovative, introducing new products, new programs, and pushing to the next level, as you mentioned. And so I wanted to convey gratitude and congratulations for a very successful confirmation hearing, and look forward to, of course, what's to come in this next chapter.
Thank you, Madam
Thanks.
Secretary. Thank you.
Thank you very much. So, kicking off Fair Housing Month, we have a series of of resolutions that we're going to be adopting today. There were 2 resolutions that were left on the table from our last meeting. So, I think, Mr. Tam, you're going to present for us or represent those 2 resolutions. And to the extent that the board members have additional questions, we're here to help answer and process. So, with that, Mr. Tam.
Thank you, Chair Sotelo. Good morning, members of the board. Erwin Tam, Director of Financing. Resolutions 22-06 and 22-08 were placed on the this meeting's agenda from the last meeting. Both the single-family and multifamily bond resolutions delegate authority to staff over the issuance of bonds or other types of debt. A question was raised during the last meeting regarding delegating authority to staff for approval of these types of financings. In consultation with the agency's Multifamily Programs Bond Council, governing bodies, including this board, can delegate authority to the executive director and to staff to prepare and offer debt. Although the agency has not been a frequent issuer in the past, the financing division will be responsible for distribution to the board of preliminary official statements when they are posted. In addition, the investment and debt management policy being considered later today will also contain a required post-sale report to the board. So now I'm going to talk about, summarize again the bond resolutions. The multifamily bond resolution allows the agency to finance its multifamily permanent loan production through the issuance of bonds and allows the agency to hedge these commitments. In addition, the resolution authorizes the agency to act as an issuer of conduit bonds and to conduct its volume cap recycling. The agency has not been an active issuer in the capital markets, with the last multifamily issuance on the parity indenture being in 2018. Under the current multifamily bond resolution and through the direction of the executive director, the agency has begun to actively hedge its exposure to higher interest rates. The board will receive regular reports from the multifamily division and from the financing division on outstanding bonds and interest rate swap hedges. I can continue with the presentation to the single-family bond or take questions on the multifamily bond resolution at this time.
Let's go ahead and consider questions right now on the first resolution. Sure. Director Cervantes.
Thank you very much. Actually, this isn't so much a question. Well, I raised the question at the last meeting, and I really appreciate staff and general counsel reaching out to set up a call with bond counsel at Orr, Carrington, Sutcliffe to talk through this point. So the questions I had with respect to authorizing disclosure were satisfied in that. Mm-hmm. So I really appreciate the outreach. It was helpful to get clarification from counsel, and I'm perfectly fine with both resolutions.
Wonderful.
Thank you.
Thank you, Director Cervantes. Are there any other questions on this particular resolution? No? Okay. What I'd like to do is I'd like to go ahead and adopt each of the resolutions separately. That way we're clear about the action. The only thing I would say is during your report backs, let's go ahead and make those quarterly.
Sure.
You know, whether or not there are updates, at least we know that they're a standing agenda item and we can report back quarterly. So with that, do I have a motion to adopt the resolution. And a second? Okay, a motion and a second.
I'll second.
Director Cervantes. Melissa, if you can go ahead and take roll call.
Ms. Davila Farias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbasciani?
Yes.
Mr. Hunter?
Yes.
Mr. Starr?
Yes.
Director Velazquez?
Yes.
Secretary Castro Ramirez?
Yes.
Ms. Sotelo?
Yes.
Resolution 22-06 is approved.
Wonderful, thank you.
I'll continue with the single-family bond resolution. This resolution allows the agency to finance single-family mortgages through the issuance of bonds. The agency has not been an active issuer of single-family bonds, having last issued in 2011. As such, the outstanding bond balance has been declining over time. And we have regularly reported the outstanding bond balance through the swap and financing risk factors report, which is semi-annual to this board. Staff recommends approval of Resolution 22-08. I will now take any questions.
Members, any questions? Any comments? Okay, with that, we'll go ahead and consider a motion to adopt 2208.
I move that we approve Resolution 2208.
Is there a second?
Second.
Mr. Hunter? Melissa, please take roll call.
Ms. Davila Farias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbasciani?
Yes.
Mr. Hunter?
Yes.
Mr. Starr?
Yes.
Director Velazquez?
Yes.
Secretary Castro Ramirez?
Yes.
Ms. Sotelo?
Yes.
Resolution 22-08 is approved.
Very exciting. This is really great, since 2011, right? Okay, with that, Mr. Tam, please continue to item number 6.
Great. We have forwarded to the board 3 resolutions considering the approval of financial policies. The board has prior adopted two of these policies, the master hedge policy and the investment policy. The board has been presented the disclosure policy, but only as an informational item, and has never formally adopted this policy. As we will discuss later, the scope of the 2 board-adopted policies is proposed to be expanded. Staff is proposing that the board approve an expansion of scope to the existing master hedge policy to incorporate additional financial risks. The new policy will be called the Financial Risk Management Policy. Staff is also proposing adding in a debt management component to the investment policy, making it the Investment and Debt Management Policy. These financial policies outline the agency's principles pertaining to the scope as indicated. For example, for the Financial Risk Management Policy, the scope includes reserve funds and long-term liabilities. These policies also refer to procedures. Procedures are the detailed processes by which the agency will achieve the policy objectives as stated. The agency's fiscal services and financing divisions will be primarily responsible for creation of these procedures as provided for in these policies. Committees have been established to make recommendations to the agency's executive leadership, as well as ensure that the procedures produced by the financing and fiscal services divisions conform with the approved policies. The agency's executive leadership is responsible for overseeing the execution of the policies and approving changes as needed. And finally, the board exercises its oversight through the receipt of information from the agency's staff. The proposed changes in committee assignments reduces the numbers of committees in the agency from 5 committees to 3. Basically, 1 committee for each policy. In addition, each committee has been reduced in size. As stated in the policies, meetings are subject to the call of the chair and vice chair, and are given the specific responsibilities as outlined. Although it has not been formally approved by the board, I have already convened the Financial Risk Management Committee several times this year, not only to discuss the policies being considered by the board for its approval today, but also to discuss recommendations to leadership to limit the agency's risks in this higher interest rate environment. Now, what are the main changes to each of these policies? Kind of hard to tell in this, on the screen, but in green we have additions, in red we have deletions, and in brown, it was supposed to be yellow, but it doesn't really show up well on a presentation. In the brown, we have just changes to the statements. I'm going to start with the disclosure policy on the right side there. The disclosure policy is the only new policy for the board's consideration today. Currently, the agency has a disclosure policy which covers procedures that have been reviewed by staff. In an effort to increase transparency and oversight by the board, we are bringing this policy for your approval. The disclosure policy removes the need for a committee to review financial statements and transfers that responsibility to individual members of the staff. As previously mentioned, actions related to the debt issuance have been moved to the investment and debt management policy. And finally, this policy has been reviewed by the agency's bond counsel for multifamily programs and generally covers the core elements of disclosure policies with the creation of procedures as delegated to the Director of Financing as provided for in guidance by the National Association of Bond Lawyers. Moving to the middle column, the investment and debt management policy. The agency's debt management policy has been incorporated in part from the disclosure policy, and the agency is committed to, in adopting this policy, the agency is committed to a transparent and competitive process for selecting its underwriters. We have added into this policy the use of firms only contained within the State Treasurer's Office underwriters pool. The debt management piece of this policy has also included appropriate use of proceeds for debt parameters for such issuance. As noted earlier during the financing resolutions, the board will be receiving post-sale reports as produced by the financing division, and this report has been stated in this policy. On the investment side, there are specific policy references to internal controls for fiscal services. And finally, authorized personnel for investments were corrected to only include the Director of Financing. Financial risk management policy. This has the most additions. As previously stated, the prior policy only covered new interest rate swaps for multifamily permanent loans. The proposed amended and restated policy also incorporates the agency's emergency reserve account and adds a hedge reserve account. The board adopted this emergency reserve account in 2017. The incorporation of this account under this policy will ensure that the agency will be reviewing the sufficiency of both the amount of assets and the type of assets in the account. The agency's hedge reserve account under this new policy will be created to address shortfalls with respect to hedges in the multifamily loans and also to be opportunistic in determination of the agency's existing orphan swaps. As stated in last month's informational report, the agency still has significant liabilities related to interest rate swaps entered into almost 2 decades ago. And based on the swap agreements, the agency could still have residual liabilities almost 2 decades from now. In a meeting with the executive director, the agency's financing division has been tasked with addressing these liabilities. As such, the new policy contemplates the review of financial alternatives and a cost-benefit analysis on no less than a quarterly basis. Finally, there's also language in this policy about single and multifamily portfolio review. This is the last slide. I can take questions on any of these policies, but I would like to say that I have enjoyed working with everyone who's put forward comments on these set of policies, staff in the agency's financing divisions, members of all these committees, the agency's executive leadership, external advisors, including both its swap advisor and multifamily programs bond counsel.
Thank you, Mr. Tam. So, board members, I'd like to deal with each of the individual policies, and we can do kind of a round robin of questions if you're available to answer.
Yep.
So let's first start with the disclosure policy, which is new to the board and is on page 66. Is that all right with it? Okay, so Dr. You'll hold, okay? Director Velasquez, do you have any questions on the disclosure policy?
I have a more general question.
Okay.
Is that
Yes,
is
it's
that okay
appropriate.
to
Yeah.
so through you, Madam Chair, question for the executive director, because this is a question that's been in my mind since I joined this board. And I think it's relevant as we dive deeper into the content of these policies. We're not a board of a commercial bank. Right?
Right.
We're here to solve critical problems as a social housing bank. And because of that, our risk tolerance has to be higher. You know, especially in the context of interest rates rising. And so I like to just pause. There's important content in these policies, but I just want to pause and reflect a little bit about the principles and what the decisions that we make as a board of CalHFA, knowing that it's okay for us to take higher risk than other financial institutions because we're solving a type of critical housing that requires that tolerance to be higher. So I just wanted to just express that as we consider these policies, because it's really important to know the types of issues that we're trying to solve here. And it goes to this, to what's in this, what's the content of these policies, and where we're leading in terms of that risk behavior that we're operating on.
That's a very excellent point, Director Velasquez. Thank you. And so as we look at it through that lens, right, let's ask the questions about each of these policies. Dr. Graciano, did you have a question?
On the next
Okay.
subject.
Okay, so on the disclosure policy, one of my questions is the checks and balance. I think for me, I'd like to have two questions answered. One is the compelling reason for the modifications and why now and why these modifications, and what's the premise of the modifications. And then the second question is, what is our checks and balance? As a CalHFA Board of Directors, we are basically overseeing and, leading the charge on the policy with regard to risk and our risk tolerance. But what is our checks and balance, and report back to the board?
Sure. I'll take the first question about the disclosure policy. The agency is preparing to enter the capital markets for the first time in quite a number of years, and so in kind of preparing to do so, we're taking a look at the existing policies as written, and finding areas that we need changes and improvements. And that sort of is the onus of this whole, all three of these policies. What do the existing policies say we're going to do, and how are we? And given that we are going to enter the capital markets probably in the second half of this year, probably fall, if you will. Are the policies and procedures written in such a manner that protect the agency, but also are comprehensive and kind of easy to follow by staff? And so the policy, what I'm putting forward today is policies, and which will be supported by procedures as developed by both the Financing Division and the Fiscal Services Division. And those policies, again, we've established committees for, going to your checks and balances questions. The committees will sort of be the checker of things to make sure that the policies as approved kind of obviously are aligned with the procedures as created. If they are not, the committee will tell myself or the comptroller, no, they are not, and then we will obviously conform them to the committee's recommendation. In the unlikely event, or maybe there will be an event that the policies need to be changed themselves, then it'll flow upwards, to the executive director to make those changes. So that's kind of, again, the committees have been empowered sort of to act as the eyes and ears to make sure that, again, the policies and procedures are aligned together at the agency.
Madam Chair?
Yes, please.
Can I suggest, just sort of building on the point made by Board Member Velasquez regarding sort of guiding principles. My sort of read of the policies was that the changes that you've presented are to reflect changes, updates, cleanup, clarity.
Yep.
And so I think maybe for the purpose of today's conversation, if we can look at the policies from that perspective, but I think maybe for a future conversation, it may be helpful as board members just for us to think about what are some of the guiding principles that we would like as a board to adopt, and then sort of figure out how they apply to some of the policies. So as Board Member Velasquez mentioned, given the challenges that we know with regard to producing housing that is affordable, we have to have greater tolerance, but we also have to be prudent, right? And so how do we strike that balance? And I think that that's a conversation that we can have at the board level to provide some input. I'm just not sure that we're prepared to have that conversation today, because I think what's being presented today is policies to bring these matters to be current, to enable the staff to continue to do that kind of day-to-day work. That would be my recommendation for. So I would like to move forward to adopt the disclosure policy as presented.
And do we have a second on that motion?
I'll second.
Okay, go ahead,
Before we vote, just
Director.
a couple of comments on the disclosure policy, and actually in some ways all of these together. And it goes a little bit to some of Tiana's opening comments. I've been on the board long enough to remember a time when the Senate Rules Committee was seriously questioning the transparency and management of this agency. And in particular, asking whether the board knew what the heck was going on. And that was a very real question in the Capitol. And as a incoming board member was a little disconcerting. And so when I read these items, I was pleased to see, particularly starting with the disclosure policy, a commitment to transparency in the way particularly that we handle bond transactions, which was at the heart of a lot of the confusion and anxiety in the midst of the Capitol collapses in 2008. And this board at that time had spent a lot of very difficult hours wondering whether the entity would survive and what would happen if it didn't. So being able to, understand, to me, there's a lot more clarity, and it's clear what the expectations are for disclosure, and I just really appreciated that this is upfront and that we're seeing this, and it's stated in a very clear way, and creates the platform for moving up to the other two policies. So I just want to appreciate staff's work on this.
Director Hunter, that's very good context, and we really appreciate the context, because you're right, this was something that was a long time in the making. Director Starr, did you have a comment?
Yeah, I have a question for Erwin.
Sure.
Well, first I wanted to say thank you for your presentation and the context you provided, especially in the slide here that shows what's been added and what's been taken out. As a fiduciary, as the treasurer is a fiduciary, and I'm representing her today, we do have a question related to the disclosure policy and as to whether the typical disclosure counsel that the agency utilizes for other work was consulted in the preparation of this policy.
Yes, again, they have reviewed it and have said it generally conforms with the National Association of Bond Lawyers, get their document, crafting disclosure policies, guidelines. And that includes the NABL guidelines includes procedures, and that's sort of underneath this document, which will be produced. But assuming that, the two of them are created together, they have reviewed and are okay with this policy as drafted.
Thank you. And then I have a sort of more general questions about the other two policies. Should I wait till?
Yes, I wanted to get through the disclosure policy first, because it just forms a foundation. But so if you don't mind holding your questions on that. Dr. Bastiani, and then Director Cervantes.
Thank you, Madam Chair. Are we on?
Yes.
I thought I had a specific question, but I see now, following Director Hunter's comment, it's more general. Insofar as we have delegated authority to staff, with what frequency will you bring changes to any of these three kinds of policies back to the board?
Right. So, we're committing to an annual review, but to the extent, my view is that these are living documents, that to the extent we need to find that something needs to be changed or brought to the board's attention, we will do so at whatever frequency we need to. There's no need, and I think that prior practice may have just been an annual review, but that's not the way I think we should approach these policies. We should, again, these are important guiding principles for the agencies, for the agency, and again, to bring to the board's attention at any time that we feel as important.
Thank you.
Great. Again, we have a motion and a second. So Director Cervantes?
Thank you, Chair. I just want to make the comment, I was here last week for sort of a update on CalHFA and my crash dive into this program. And I want to say that Erwin sort of walked me through this approach that we're talking about here. One general comment, which is, I like the approach wherein you've got these more streamlined committees that are tasked to the discrete policies. It seems to me that you've got a structure in place which has got fewer players, but more accountability. And so therefore, I think a better mesh with what the board's about. So it's just a general comment. I like this approach. I think that, and I had a couple of questions, some other ones, but I just thought that it was helpful to have a structure in place where you had clear identification of who's responsible and what policy they are in charge of, and I think it helps the board. Thank you.
And so as we vote on this, if you could turn it back to the previous slide so that we understand who's on the committee for the disclosure policy. So that's who's on the committee. And with that, we'll go ahead and vote on.
Madam Chair?
Yes, please, go ahead.
I first and foremost, I want to thank you, Erwin, and your team that worked to put this together. This is an area of, it wasn't an area of concern, but I think it was an area of cleanup. And Erwin approached this with fresh eyes. So I'm going to compliment Don for the hire. We'll start there. But I think what we had hoped to do and what we were doing was trying to be a little bit more prudent. This actually helps us in many ways that go even beyond what we are speaking to today. It helps us in our accountability with our rating agencies. It helps us in really telling the story of who we are, setting us up to do more work in the capital markets going forward. There's a lot of things here. And I particularly like this because it's also setting up internal accountability to ourselves and to this board. So I did want to just take a moment to acknowledge the amount of work that went into actually pulling this together and how important it is relative to this agency, both internally and externally.
Yes, it's very foundational work, so thank you very much.
And I'd like to just second, excuse me, Chairwoman.
Director White, go ahead.
Just to piggyback on Executive Director Hall's statement, and really Director Ramirez, this approach, I see as an innovative way that the firm is going to enter in the capital markets. And I think that in itself will be a game changer. So as long as we can get these guiding principles set up around it, I do think this approach is a game changer.
Okay. Thank you very much, Director White. Okay, so with that, we have a motion and a second to adopt Resolution 2213, the disclosure policy for the agency. Melissa, a quick roll call.
Ms. Avila Farias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbasciani?
Yes.
Mr. Starr?
Yes.
I'm sorry, I skipped Mr. Hunter.
Yes.
Thank you. Director Velasquez?
Yes.
Secretary Castro Ramirez?
Yes.
Ms. Sotelo?
Yes.
Resolution 22-13 is approved.
Wonderful. So, Mr. Tam, if you could go to the next slide again. And we are now going to consider Resolution 2212, the investment and debt management policy. Again, if you can address checks and balance questions, and then also board members, if you have any questions with regard to this. And I think Director Starr had some additional comments.
All the policies set up the same reporting structure, and that was one of my goals, was to try to harmonize them to make sure that we're not confused or there's some sort of different process. Again, so for investment and debt management, obviously the comptroller is more involved in the execution of investments. They will promulgate procedures. Financing is more on the debt management side. We'll also have procedures relating to debt management. There's the committee that is going to conform them with the policy. So again, similar to the disclosure, less people on the committee, but again, reporting up to the executive director and to the board.
Wonderful. Director Starr?
So generally, more of a comment. In regards to the disclosure policy that we just approved, my concerns and the treasurer's concerns were mitigated, I believe, by the reliance on disclosure counsel. In regards to the financial risk management policy and the investment and debt management policy, we do appreciate the context provided in both the slide and your presentation. However, a ideal scenario for board members to make an informed decision about these types of policies, I believe, and I believe the treasurer shares this opinion, that these items would be presented and that we could then confer with our individual councils and designees and come back to these two items at the next board meeting. So I am, and through the treasurer, making a motion to actually table these, the financial risk management policy until the following meeting. And that is not to say that the treasurer is not supportive of these policies or the changes that are contained in the items, but we need additional time to confer with our council and designees.
Okay. So let's go ahead and hear if there are any other questions, and then I have a follow-up with you, Executive Director Johnson Hall. Any other questions with regard to this investment and debt management policy issue? So my question, I guess, Executive Director, is what is the impact of tabling either of these items for further consideration?
I'm going to ask Don to step to the table to answer this question.
And I would just say that, given that these are policies that are living, breathing policies that can be modified and changed, we can choose to adopt and then modify later, or we can choose to table. But with that, Don, go ahead.
I think the simplest answer is from the most simplistic standpoint is that it doesn't do anything, because currently we have none of these changes that Irwin is proposing in play. I think it just sets us back in terms of implementing the strategy that he's put forward and sort of making it a more streamlined process as we approach issuing debt into the marketplaces in the coming months, which we're geared up to do hundreds of millions of dollars worth of bonds soon. So I think it's important that we expedite this, but whether we delay it another meeting or not is entirely up to the board's discretion.
Thank you. That's helpful. Director Avila-Farias.
Thank you, Madam Chairwoman. Maybe a suggestion, just moving forward, because I can understand, outside of our board and CalHFA, coordinating with other departments to review policy. But we do have the process of which may be not ample time of when the agenda is posted and review, but maybe we incorporate a process even earlier as our executive director is putting the agenda together and giving our auxiliary departments a heads up of what's coming that might create dialogue, so that we're not in this situation, because I'm always for more dialogue and input, but I also appreciate and know what it takes to put agendas together and move items forward. So I'm inclined to support moving forward with it, with the caveat that we can always come back and revisit if the secretary has revisions or comments that are alarming. But I think even moving forward, just kind of setting how we can have better communication up front, so that we can come with those revisions or have staff. I think it just works better for them. So I don't know if you're amicable to that friendly amendment of that suggestion of moving forward with setting up a protocol of how we can.
Well, or perhaps instead of putting you on the spot for that particular, we could do a motion that is subject to final review and approval by the state treasurer's office as a partner. And that way, if that approval is given in the interim, then the motion applies. If not, then it doesn't go forward.
Madam Chair, I do have some challenges with that.
Okay.
This board actually has the final say over what happens with this organization.
Right.
So I would not be, with no disrespect to the treasurer's office, of course, I don't feel that might be the best direction, given that we don't want to take the authority out of this board and place it with another agency. I do understand your concerns, Director Starr, and the concerns of the treasurer, which we are mindful and respectful of. I lean in towards Director Avila's suggestion. We are happy to revisit this with the treasurer's office. We have worked very closely with the treasurer's office, and we will always do that. I am just having been an ex-player in the capital markets, timing is everything. And I am aware that we do have some ongoing discussions, or we have discussions with various folks who are really quite interested in us because of our excellent financial position. And so if you could oblige us and allow us to move forward, and I mean this to the entire board, not putting you on the spot, Director. I think that I understand your concerns, and I think that my team can get you there without having this wait for another meeting.
Right, and if I can add too, the context that's provided today in Erwin's presentation and these slides is extremely helpful. The problem is that we don't, as board members, don't receive this context until the meeting. And of course, the treasurer wants to be able to meet and confer with her counsel and internal stakeholders to ensure that the context that's provided aligns with her decision-making that will be made here at the board. And so I appreciate, as we move forward with these similar types of decisions in the future, that sort of information sharing practice is sort of implemented.
Yeah, I definitely hear the spirit of that collaboration within both Erwin and Dawn's perspective, and then certainly the executive director. So what we can do, we have two different viewpoints on this. What we could do is entertain a motion and a second for adoption of this, or a motion and a second to table it. So either one, I'll call for a motion, either way.
I'll move Resolution 2212.
For adoption.
For adoption.
Is there a second to that? Okay, so we have a motion to adopt and a second. Is there discussion on that motion? Okay, so we can take, yes.
Excuse me, Madam Chair, if I might talk about the administration of this, or facilitating this discussion, is we have a motion on the floor that Mr. Starr has presented.
Oh, I'm sorry, I didn't know it was a motion, I'm sorry, I didn't hear it as a
He presented
motion.
it as a motion. And so.
Okay, so we can call for a second on that motion.
So in order for the tabled motion to be considered by the board, we would need a second to do that. If the
Right.
board decided they didn't want to do that.
Correct.
Then that would kill the motion. So just throwing the options out there for you.
Apologies, Mr. Director, sorry, I didn't realize it was a motion. So is there a second to the motion to table the action?
Second.
You'll second, there's a
Oh,
motion
I'm
to
sorry,
table.
no, hold on.
No, there are two motions.
See,
So,
Melissa.
the first motion we have to consider.
Madam Chair, I was going to, he's able to make a motion to retract his motion, so
Right.
we can move, wouldn't that be easier instead of going through the whole?
It's easier to consider his motion since his motion was first. We'll
Okay.
consider his motion first.
It dies.
I'm sorry? Okay, so we are going to consider Mr. Starr's motion first. Is there a second to the motion to table the investment and debt management policy?
My recommendation, Madam Chair, is that you ask for a second to Mr. Starr's
I am
motion.
asking for a second.
Okay.
Yeah, that's what I'm asking for.
Okay.
Yes.
All right.
So I'm asking if there is a second to that motion. Is there a second to that motion? Okay, so hearing no second to that motion's withdrawn. Now, the second motion that we have is a motion to adopt the debt and investment policy, and we have a second of that motion. Now, if there's no discussion, we'll go ahead and do a roll call to that motion. Okay, Melissa, go ahead.
Ms. Avila Farias?
Yes.
I do want to be clear, we are
This is
approving
the motion.
Resolution 22-12 at this point.
The motion is to approve 22-12 investment and debt management policy.
Thank you.
You have a motion and you have a second. Now we're doing the roll call.
So I just want to start again. Ms. Avila Farias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbasciani?
Yes.
Mr. Hunter?
Yes.
Mr. Starr?
Abstain.
Director Velasquez?
Yes.
Secretary Castro Ramirez?
Yes.
Ms. Sotelo?
Yes.
Excuse me. Resolution 22-12 is approved.
So, board members, Mr. Tam, if I can have you finalize any presentation on item Resolution 2211, Financial Risk Management Policy.
I can entertain any questions from the board for this agenda
Can
item.
you please move it to the previous slide? So those are the members of the committee overseeing the financial risk management policy. Are there any additional questions for Mr. Tam? If not, we'll go ahead and entertain. Yes, Director Cervantes?
Thank you, Chair. If I could note, I had some kind of more nitpicky questions I passed to Erwin earlier. He answered them with respect to the policy. I like this. I like the fact that the quarterly update of the value of these orphan swaps, and because that's a factor in the portfolio that we need to be aware of. So to me, this seemed like a good proactive policy to consolidate the issues of financial risk in this group, which to me seems like the right body to sort of like deal with it on the staff side. So just wanted to note that, and I appreciate the feedback.
Right, and this was under the guidance of the executive director to start addressing our liabilities as stated.
Yeah.
Director, Dr. Imbasciani?
Stop, could you please read the footnote?
Oh, sorry.
The
yes.
asterisk?
It is actually can designate another individual. Of this, for this committee, the committee is chaired by myself, Director of Financing, Vice Chair is the Director of Enterprise Risk Management and Compliance. Members are the Comptroller, Risk Manager, and the General Counsel who can designate another individual.
Thank you.
Director Hunter?
I just comment that I actually was really pleased to see very clearly articulated the requirements for the reserves for the risk. And I just thought that was very well laid out. It was I even understood it. So, thank you.
Right. Okay, directors, do we have a motion to approve Resolution 22-11, Financial Risk Management Policy?
I move approval.
Okay, is there a second?
Second.
There's a second on the table. Any discussion to the motion? Okay, with that, Melissa, please conduct roll call.
Ms. Avila Farias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbasciani?
Yes.
Mr. Hunter?
Yes.
Mr. Starr?
Abstain.
Director Velasquez?
Yes.
Secretary Castro Ramirez?
Yes.
Ms. Sotelo?
Yes.
And I also want to add Mr. White, who I have neglected to include in our last vote, so I'll go back to get your vote on those. But on this one, may I have your?
Yes.
Okay. Resolution 22-11 is approved.
So now what we have to do is we have to reopen the question on 2212 and allow for an additional vote on motion 2212. Melissa, please confirm the roll call.
And Mr. White, if I could have your vote on that resolution?
Yes.
Thank you.
Okay,
We
thank you.
also
So
need-
we'll go ahead
we
and
need
close
to-
that vote.
Thank
That
you.
vote is
Oh, I'm sorry, and the resolution 22-12 is approved?
wonderful. Great. So with that, Mr. Tam and Executive Director Johnson Hall, may I please request that we report back at our next meeting as to any additional conversations we may have had with the Treasurer's Office?
Will do.
Thank you.
Thank you.
Excuse me, Madam Chair, I also neglected to take Mr. White's vote on Resolution 22-13, 22-08, and 22-06, so I apologize.
Could I? do yes for all or each? or
That would be,
just-
that.
No, we are going to have to open each of those items
Okay.
again, if we don't mind. Okay, so for resolution 22-06, we're opening the question again, allowing for a vote. Melissa, please, I've never had this done, so please
My
amend
sincere
the vote.
apologies.
So we're opening the question again for 2206. No
Correct.
one can change their mind.
Yeah. Mr. White, 22-06?
Yes.
Thank you.
Okay, that motion is approved and moves forward. Now I'd like to open the question of 2208.
Mr. White?
Yes.
Thank you.
Okay, that motion is now approved and closes. And I think that was it.
22-13.
Okay.
I have my sincere
The
apologies.
disclosure policy, okay. And we are going to open the question for 2213.
Mr. White?
Yes.
Thank you.
Great, wonderful, thank you very much, appreciate it. That is the adoption, Mr. Tam, of your items.
Thank you.
Thank you. With that, members, we are going to move on to item number 9. No, I'm sorry, yes, item number 9. We have before us Ms. Ferguson, who's going to be presenting Alamo Street Apartments, Simi Valley, Ventura, 271 units. Welcome, Ms. Ferguson. Nice to
Thank
see you in person.
Good morning. It's very exciting day for all of us at CalHFA after yesterday's successful confirmation. So I'm here today. For the record, my name is Kate Ferguson. I'm the Director of Multifamily Programs at CalHFA. And today I have members of the multifamily team, including Sheena Coe, our credit officer, and Kevin Brown, our loan officer, as well as John Nicholas of Pacific West Communities, which is the developer and sponsor of Alamo Street Apartments. I know that you've all received the staff report and read that, so I will be brief in my comments today. Okay, if I can figure out how to move this forward. There we go. Okay. Alamo Street Apartments is a 271-unit new construction family project to be built in the city of Simi Valley in Ventura County. Today, I'm seeking board approval to provide $48.7 million in permanent financing to the borrower. The loan will be in addition to a $7 million subordinate loan from our mixed income program. Additionally, CalHFA will be the conduit issuer for $74 million of tax-exempt bonds, $9 million of tax-exempt recycled bonds, and $44 million in taxable bonds. The developer is Pacific West Communities, Citibank, and Bonneville Multifamily Capital are the construction lenders, and U.S. Bank Community Development Corporation is the tax credit investor. CalHFA currently has a strong relationship with the developer, including outstanding permanent loan commitments for 5 projects, which are currently under construction. 2 additional projects are in the upcoming CalHFA production pipeline, and we have 1 project that's already converted to permanent and is in our asset management portfolio. An allocation of tax-exempt bonds and 4% federal tax credits were received by the borrower at the December 2021 CIDLAC and TCAC board meetings. Oh, I was going to say, next slide, please. Okay. The 271-unit project will consist of 1 3-story garden-style over podium for a total of 4 stories, elevator serviced apartment building. Affordability will be from 20 to 80% AMI. Pursuant to a recent appraisal, the project's absorption period is approximately 10 months based on 27 units per month. The capture rate is 28% of total demand for family units within the primary market area, which includes Simi Valley and Moore Park. The unit mix will include 138 2-bedroom units, 91 3-bedroom units, and 42 4-bedroom units. This is the detail of the subject site. The site is currently a portion of an existing 5-parcel assemblage, which will constitute 6.87 acres. The assemblage will be merged and then subdivided into 2 separate parcels prior to construction. The first parcel, totaling 5.87 acres, will be acquired by the developer as the site for the project. A strip mall, which currently sits on the site, will be demolished. The second parcel, totaling approximately 1 acre, will be retained by the seller. A common area agreement will be executed between the seller and the developer for the 2 parcels, stipulating rights and obligations of each related to easements for trash, utilities, fire and drainage, roadway access, and parking. The site is located within a moderate resource area per TCAC and HCD's opportunity area map. I won't go through all the project strengths and weaknesses or the underwriting exceptions, except to note that they are located in sections 7, 8, and 9 of the staff report. And with that, I'm happy to take any questions.
Ms.
So
Sotelo,
if-
I'm sorry, please go ahead. Would you like me to go ahead and discuss briefly what you and I just discussed? Members of the board and Ms. Ferguson, I'm so sorry for the interruption. Ms. Sotelo informed me that in an effort and an abundance of caution on her part, she feels as though she may have a conflict, so she will be abstaining from any participation in this discussion whatsoever. And Ms. Johnson Hall will facilitate the meeting until Ms. Sotelo can participate again.
Okay.
Thank you.
Thank you.
Well, thank you for your presentation, Kate. I believe you mentioned that there was a representative from the developer that is doing this project here.
Yes, John Nicholas.
Mr. Nicholas, would you like to speak to the board?
Thank you for having us here today. And,
You can sit up right here.
Yeah, oh, all right. We're in good and capable hands, I can tell. We're just very excited about this project. As Ms. Ferguson alluded to, we're going to be demolishing a strip center and much-needed affordable housing in the area. Obviously, a number of projects were already, partnered up with the CalHFA, and just excited to, add to the pipeline of, much-needed affordable housing in the state. So happy to answer any other questions that you have.
Thank you,
Can
Mr.
I-
Nicholas. Director Velasquez, you are recognized.
Thank you. Just a couple quick comments. Well, one comment, one question. First, the amount of information provided on the project is just extraordinary. So I just want to commend the team, the staff, for just giving us so much rich information that really gives us all the detail that I don't know about the project. So I want to just say thank you for that. That's terrific. And then I did notice, again, because of the richness of all the information, that the project was encountering some issues in terms of local opposition and approval. Has all that been resolved? We're moving forward?
It has, actually, a very good standing with the city now, the HOA and the neighbors. It's a little rough at the beginning, but, it's actually going very well now.
Good to hear. Thank you.
Thank you. Do we have any other comments or questions from the board?
Yeah, just one question, and you may not have this answer here. It's something that you can email me offline. The average affordability for the program, for the MIP program, do we know that, that
For the-
number? For the MIP program?
Just for the, overall?
Yeah,
the entire
overall.
program. For 2021,
Start there.
was it 56?
I want to say, yeah, it was around 56. But
Okay.
we can get the details.
We can get the detail. We actually have provided our dashboard of that before, so I'd be happy to distribute that. Initially, it was in the low 60s, high 50s, and I believe for 2021, it was 56 or 57, and we expect the same for 22, 23.
And we anticipate it will bump up a little bit. There's supposed to be favorable interpretation of the IRS guidelines this year, probably being decided upon here this summer. So the investor and the lenders are aware of that. So we should be able to, get some more help there, this summer. So
Thank you very much, sir. Any other questions or discussion from the board? Seeing none.
I'd like to make a motion and move for approval.
Second.
Thank you. Director, it has been moved by Director Secretary Castro and seconded by Director Velazquez. I would like to take a roll call for the vote.
Ms. Avila Farias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbasiani?
Yes.
Mr. Hunter?
Yes.
Mr. Starr?
Yes.
Director Velazquez?
Yes?
Secretary Castro Ramirez?
Yes.
Mr. White?
Yes.
Resolution 22-14 is approved.
Melissa, can you please note for the record I'm abstaining?
And an elbow bump from the developer, so thank you very much.
Thank you, sir. Have a great day. We'll now turn the meeting over to Chair Sotelo.
Thank you very much, Executive Director Johnson Hall. With that, Ms. Ferguson, please go ahead with presentation under item number 10.
They're just when I need you. Perfect, thank you. Okay, our next project today is Kelsey Ayer Station. Again, for the record, my name is Kate Ferguson, and I'm the Director of Multifamily Programs at CalHFA. I have members of the multifamily team, Sheena Coe and Kevin Brown, our credit officer and loan officer on this project, as well as a representative of the developer, Caroline Boz. I know that you have all read and reviewed the project, so we'll go right into the presentation. I can change that. Today I'm seeking board approval to provide a $15.9 million permanent loan to finance the Kelsey Ayer Station Apartments, which will be a 115-unit new construction project located in the city of San Jose. Affordability of the 113 units will be from 30 to 80% of AMI. CalHFA will also provide a $4.6 million subordinate loan via our mixed income program. And we will also act as conduit issuer for approximately $36 million of tax-exempt bonds. The developer sponsor is Divine and Gong. Capital One is the construction lender, and Enterprise Housing Credit is the tax credit investor. While CalHFA does not have direct experience with Divine and Gong, the developer has deep experience in affordable housing throughout the state. They completed 6 projects containing 822 units in the past 5 years. They have 1 project containing 54 units under construction and 3 additional projects with an additional 473 units in their development pipeline. An allocation of tax-exempt bonds and 4% federal tax credits were received by the borrower at the December 2021 CIDLAC and TCAC board meetings. In the face of rising costs and on the developer's behalf, CalHFA has submitted an application to CIDLAC for a $2 million supplemental bond allocation. This will be decided at the June 2022 meeting. As I said, the project is 115 units. It will be 89 units of studios and 24 two-bedroom units. 22 of the units will be designated for tenants with disabilities who qualify for HUD 811 rental subsidy, which will be administered by CalHFA. An additional 6 units will be designated for tenants with intellectual development disabilities. These tenants will be referred to the project by the San Andreas Regional Center, which will also be covering the cost of the tenants' ongoing supportive services. As a transit-oriented development, the project will provide only 10 parking spaces, which will be designated solely for either ride share or for parking for those with disabilities. The project will consist of 1 6-story elevator-serviced building. The site consists of an existing 2-story vacant commercial structure that will be demolished. The project is located within walking distance to transit and services. The site is within a moderate resource area per TCAC and HCD's Opportunity Area Map. Pursuant to a recent appraisal report, the project's absorption period is only 4 months, which contemplates 28 units a month, and the capture rate as determined by the appraisal is less than 1% at 0.95. This is the I hope it's, yes. This is the detail of the subject site. The current owner, the Kelsey Air Station Limit LLC, is the managing general partner of the borrower. They purchased the property on January 8th of 2021 for a price of $3 million. And they will be selling the land to the city of San Jose for $3.1 million prior to close. The city will then execute a ground lease with the borrower for a term of 99 years. There will be ongoing ground lease payments paid from a portion of the city's pro rata share of residual receipts income on an ongoing basis. And again, I won't go through all the strengths, weaknesses, and underwriting exceptions. They are located in section 7, 8, and 9 of the staff report. I actually don't think we noted any underwriting exceptions for this deal. So with that, I'd be happy to take any questions, or the developers here, if anyone has questions for the developer.
Yes, we can have the developer please come up.
Thank you so much for having us today. I'm Caroline Bosch from the Kelsey.
Can you tell us a little bit about the project or about the
Of course. So the Kelsey Air Station is the Kelsey's first project. We are a nonprofit organization focused on disability-forward housing. So specifically building housing that's designed and operated to be centered around people with disabilities, but really benefiting all residents who live there. And so one of the exciting parts of being a part of the mixed income program is we really see the importance, especially for people with disabilities who want to live in community-based settings, to live in mixed income settings. And so we were so excited that we were part of this program and really excited to move forward on closing this deal in the next 8 weeks. Our partners on this project, Divine and Gong, as noted, are very experienced housing developers, as well as another partner, Ceres Regis of Northern California, and they build a lot of this type of housing within the region. Our property manager, John Stewart, is a very well-known property manager in all of California. So although this is our first project, we are surrounded by people who have done a lot of these projects in the past.
Welcome to the community development field. Hold on. Director Hunter, you had a question?
Yeah, so I'm glad to meet you and glad to hear about the philosophy of the project. A couple of questions. One is on the 811 units, if I do the math right, the 16 that are not IDD, do you have a specific population? And beyond the services funding built into operating, is there some external funding for services for those other 811 units?
Yes, so we have 22 811 vouchers. We have 2 referral agencies. So half of them would be coming through the Silicon Valley Independent Living Center. And those referrals are mostly for folks who are coming from congregate settings or institutions that don't necessarily have intellectual or developmental disabilities, but could live in a community-based setting if housing was available. And so we'd assume half of those referrals of those 22 would come from SVILC, and then the other half coming from the regional center, who caters mostly to people with intellectual and developmental disabilities. For both of those populations, all of those folks would have IHSS or services that are provided by the regional center. And what we do through our resident services budget is we provide a service-ready living environment, so we can help provide service coordination for those folks that rely on in-home community-based services. So our resident services budget is not providing any services, say, within the residents' apartments, but more making sure that they are connected to the services that they need in order to live independently.
Thank you. Great project.
Director Velasquez?
Oh, the secretary, I think.
Oh, I'm sorry.
Well, just a comment and a question. First of all, very thoughtful development project, transit-oriented, very focused on the population that needs both housing that's affordable and supportive services. And so very much appreciate the work that you're doing in terms of expanding that level of housing opportunity and supports. And then so my question is with regard to the cost, and just, of course, comparing the per unit cost for this project, and maybe this is more of a question for you, Kate, and the per unit cost for the previous project, it is higher, right? And, there are, of course, a number of drivers, including geography, that drive that cost. But I just wanted to see if you can share with us what are some of the drivers that are leading to an over $600,000 per unit cost for this particular project?
If you go to the sources and uses of funds, it's on page 127. I believe that details the construction and permanent costs. And if you look at some of the drivers, I mean, the San Jose, obviously building in San Jose is more expensive than building in Simi Valley. I think costs overall will continue to rise. We'll see that, but I think the geography is a big piece of it. Certainly the podium, this isn't the podium construction, I'm sorry.
It's, we have podium on the first floor and
Right.
stick over podium.
Right, stick over podium. I really should let the developer answer this.
Okay.
I
Okay,
don't
no,
know
that's
why
fine.
I'm going through this, because I didn't prepare for
Yes,
that.
no.
I didn't prepare for
No,
that
that's a great
discussion.
question, and,
Yeah,
and
go ahead.
construction costs, if you were to look and compare this to any other project, I think we have lower than average financing costs, and this is partially through us working with more concessionary lenders, both us ourselves as a nonprofit. The Kelsey has committed a philanthropic commitment to this project, and so that has been fundraised by private foundations and individuals in the area, as well as we worked with Google's Affordable Housing Fund and got a low interest pre-development loan. And so our financing costs are below normal. Our other soft costs, I would say, are on par, but our construction costs, because it is a prevailing wage project, is going to be more expensive than in other regions. Also, I'd say that it's a tight site, an infill site. We're using every single square inch of that site, and so coordination costs are a bit higher. We did look at some of the more innovative, lower cost construction approaches like modular, but because of the tight site and because of actually also our respect and interest of working closely with our neighbors, that did not prove to be possible.
Thank you.
I will
Thank you.
just add that on page 5 of the staff report, there's a detail of the high cost explanation, which Sheena has just handed to me. The cost per unit of $622,435 is largely, it's mostly the prevailing wage. Also permits and impact fees of $2.8 million. And then as you were just discussing, $2 million in increased costs related to doing an infill site and all of the complexities that go with that.
Thank you. Thank you.
Thank you. Okay, and just so folks know, page 5 of the staff report is 117 in your packages.
Yes.
Director Velasquez, did you have a question?
Just a quick question, because Ms. Ferguson mentioned the supplemental, so we'll keep an eye on that. But when did you receive your 4% allocation? Do you remember?
In the December meeting.
Okay, December. Okay, and then another comment. I don't know if Mr. White's previous question about the average MIP affordability is related to this, but I noticed that on the table for this and the previous project, it's listed under MIP at 120, but it's up to 120.
Up
It's
to
not-
120,
okay.
yes.
Okay, it's just there is another column from 80 to 120, and I would have.
So we include in the staff report several different affordability, I'm trying to find it
Yeah.
exactly, several different affordability tables. It's on page 120 of, I believe, 120 of the staff report of, 120 of the board packet and page 8 of the staff report. And you can see that the CalHFA MIP, these are the requirements that we have, but overall, the City of San Jose loan, the City of San Jose ground lease, there are multiple, the HCD TOD loan, multiple levels of affordability throughout this. So really, we're going from 20 up to 120, but
But for
really
the MIP,
80.
it's up to 120. It's not.
Yes,
Okay.
exactly.
I just wanted that clarification.
Yes, sir.
Yeah.
And that's a very good point, Director Velasquez, and it's not necessarily for this project, but this is a good example of a project that creates mixed income opportunities for the full spectrum of residents that will be living in our developments, and I think that's very important to look at this project. But as we consider the policy and/or the programmatic impact of the MIP program, maybe at a future meeting, we can discuss kind of the average affordability that has resulted over the last 3 years of the MIP program versus the intentionality of the program when we first developed it, 5 years back, which was to address the missing middle, higher income households. But this is an excellent example of how the MIP program has inadvertently created an opportunity under the full spectrum of lower income individuals to be able to be housed under the MIP program and supported by us. So as a follow-up, if we can note, Melissa, we should probably have a dialogue and a MIP program discussion at a future meeting.
That was going to be my comment. Director Velasquez brought this up. I think we should, going forward, highlight, when we're in these areas where we know we're going up to 120, we want to get in front of it and say this is also what we're doing, because it is what we were setting out to do. We're kind of hitting all of the incomes through the spectrum. So this is a great showcase of that with this deal in this high cost area. Also, something the developer mentioned, you receive pre-development funding from Google. That's very interesting to know and to highlight as well. It's very important.
So just another comment on that, on this whole question of how it fits into the mixed income program. Again, this is a disadvantage of being so old. But when I was first doing supportive housing work in the last century, the early dream was that we would do integrated housing and that the higher levels of income would in essence pay rents that would subsidize the operating costs to allow the supportive housing units to be integrated into almost market rate development. And it never worked. And so we abandoned it and started going to 100% supportive projects. And then the people who live in those projects said they wanted to live in normalized communities, so we've been trying to figure out how to get back to that original dream of functionally and in reality being integrated into livable communities. And so this project is in using mixed income specifically to enable the integration of very vulnerable, extremely low-income folks into, some higher levels of income in the same building. I just was really glad to see it, and it's also one of those interesting programmatic outcomes of the mixed income program that I don't think was ever intended when the program was designed. So anyway.
Having 26 out of the 115 units be at a higher income between 80 and 120 is a great integration of
I'll also note
resources.
it's very important for our resident services model as well, in that one of the things that we would like to do is create and cultivate informal support systems between neighbors. And we really saw this thrive during COVID. All of us saw informal support systems, come up in our neighborhoods. And so us making sure that we can invest in that community creation within the apartment building to connect neighbors who need that informal support.
Madam Chair, move to approve 2215.
Wonderful, thank you. We have a motion and a second. Mr. Hunter, Melissa, please take roll call. With Mr. White first? No.
Mr. White?
Yes.
Thank you. Ms. Avila Frias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbasciani?
Yes.
Mr. Hunter?
Yes.
Mr. Starr?
Yes.
Director Velasquez?
Yes.
Secretary Castro Ramirez?
Yes.
Ms. Sotelo?
Yes.
With all votes counted, Resolution 22-15 is approved.
Congratulations.
Thank you.
Thank you so much. And again, just a notation of future discussion and having Ms. Ferguson come back and present on the MIP program to discuss that. Okay, with that, I will note that we are at 11:30, and we are close to approaching the end of the meeting. Let's go ahead and have our discussion, Claire, on item number 11. So maybe on the presentation side, if we can, do you need a new presentation? So we can remove the old one? Okay. So Mark, maybe we can have a new presentation put on.
Thank you, Mala.
Yes, me, myself, and I.
Thank you, Gail, for adhering to our safety standards.
I'm old school. Good morning, members of the board. Thank you so much for your time and attention. I'd like to note that I heard Chairwoman Sotelo's subtle hint at expediting my presentation, which is exactly what I will do. I understand that you get hungry for lunch. I have prepared some remarks because I find that when I shoot from the hip, I tend to misfire. But I am before you today, Claire Tariainen again, as your general counsel, your board secretary, and your ethics officer. I'm here because last year, our former chairperson, Mr. Gunning, approached me and asked whether or not CalHFA had a formal code of conduct for its board members. I believe the genesis of Mr. Gunning's comments were not around any perceived or actual misconduct. They were more around the prominence of affordable housing in California, its critical importance, and him wanting to ensure that we were holding ourselves to the highest possible standards. In the interim, I've done some research and found that I could not locate a formally adopted code of conduct for our board members. As a result, I conferred with our Director of Enterprise Risk Management, Rebecca Franklin, who conveyed that she has served 3 different boards, all of which had adopted a board member code of conduct. Ms. Franklin went on to recommend that the CalHFA board should adopt one as an industry best practice for board governance. To that end, I am before you today to present the proposed board member code of conduct, which is modeled off of a multitude of other public boards. To be certain, we have an exceptional, respectful, and I have to just say stellar board. Case in point, Chairwoman Sotelo had the presence of mind in the moment to address a perceived conflict and therefore abstain from a vote just today. This is not uncommon. So many of you reach out to us, your own counsel, and really honestly just consistently use the best possible judgment. And for that, I'm grateful to each and every one of you. Even though this is a highly accomplished board, we would like to ensure that our board members hold themselves accountable not only to one another, but to the people of California. In recognition that our board of directors is a public-facing body that represents CalHFA to and for all Californians, it is essential that the board commit to conducting itself with integrity, transparency, and collegiality. As a result, I respectfully request that this board adopt resolution 2216 as its standard of conduct. Thank you, Madam Chairwoman.
Board members, I did want to point out that this is a very comprehensive and succinct policy, but really covers all of the areas. If we could just take the moment to go to your board packages, page 152 through 154, just to peruse it one last time in the public presence. Again, noting that provisions like the views expressed disclaimer, when you are representing yourself and not as a member of CalHFA board, that you have that disclosure as you engage in public dialogue. If you are representing CalHFA board, do so with the modicum of discretion and the parameters that we've set up here in the policy itself. So with that, members, do we have any discussion or any questions or any concerns? First, Director Starr, and then Director Imbasciani.
Thank you, Chairwoman. And I hate to be the source of difficulty again today.
No.
But the Treasurer's Legal Counsel has some heartburn around two provisions in the General Rules of Conduct. And you brought up the disclaimer clause towards the end that we believe potentially might be in conflict with and there's no, I'm just going to read them out loud for you, the two areas that are of concern. The not privately or publicly lobby for, publicly endorse, or otherwise engage in any personal efforts that would tend to promote their own personal or political views or goals when those are in direct opposition to an official position adopted by the board. And not to discuss personnel or board business matters outside their official capacity or outside a properly noticed and agendized meeting. At the Treasurer's office, the Treasurer obviously chairs a number of boards that are housed within our agency, and I would like to offer an alternative piece of language that we utilize at one of our boards that might mitigate our concerns as it relates to those two items. And if I can just read this out loud, it would be that individual board members are free to provide their individual opinions to stakeholders. However, they must make it clear that they are speaking as individuals, not in their capacity as board members. And again, I would just point to the disclaimer, the views expressed disclaimer seems to run, at least under the opinion of our legal counsel, slightly contrary to those 2 points that I brought up. And we believe that the language that I just shared might be useful alternative to contemplate in that regard. Thank you.
So just as clarification, Director Starr, your provision under the general rules of conduct, which bullet point caused consternation?
I believe it was three, they're not numbered, but the
Right.
third and fourth bullet points.
Bullet points, okay. And then under the views expressed disclaimer, the quotation would be simplified, under your recommendation, would be simplified to reflect what you read.
Right.
Rather than the one here. Okay. Let's entertain additional questions and then go back and have you reread that. And are you asking for a motion, or are you just making the comment right now?
Right now, I'm just making the comment.
Okay.
If there's anyone else that maybe shares that opinion or has thoughts.
Okay, just to be clear. So, Dr. Bassiani, you had a question or concern?
Yes, I do. It concerns one of the bullet points in the governing style. It's the penultimate one. If I could ask you to take a look at that, it's quote, a partnership with CalHFA management. As a member of many boards and many different kinds of boards, elected member, fiduciary, college, university board, things like that. How do I put this? There's many different kinds of roles that a board can function with the agency that it's, or the group that it's heading. This is an oversight board. And in all of my experience as a member of an oversight board, I have never used the word in partnership with. And I don't mean this to be taken, I have great partnership with all the fellow members of this board and with all of the people at CalHFA, so it's not a negative criticism. But I wouldn't want the members of the public to see that wording suggesting that we don't have that oversight rule. And I'm wondering maybe if an amendment by substitution to use the words working relationship, maybe preceded by an adjective such as dedicated working relationship with CalHFA management, or healthy working, or stable. I'm sure somebody can come up with another adjective. So I would propose not to change the spirit of it, but to change the actual word.
Okay. So now we have 3 comments on that. Thank you very much, Director. Are there any other additional concerns? Director Avila Farias and then Director Hunter?
I'm definitely okay with the suggested revisions. Overall, I thought you did a great job, Claire. I have had many of these, and I'm surprised, I think it speaks to this board that we've gone so long, for those of us who've been here for a while, of just our professionalism in our conduct and our collaborative spirit as colleagues, so that we've gone this far and not needed, I just scrolled very quickly at the end to make sure that during Zoom, there wasn't like flip-flops in there, and I thought, oh, great, we're all in trouble, but no. Because we have been so stellar as colleagues together, so I'm open to the amendments, and yes, I agree that the partnership word, I have not seen that because we are an oversight board, and we have the delicate job of having to see a very critical agency in finances, so I think I'm open to playing with that one.
Okay. Thank you very much. Director Hunter?
Yeah, I'll just start out by saying I think probably part of the reason we haven't made any egregious errors so far is we've had good advice from the general counsel. But I was really pleased with the first suggestion because I had exactly some of the same concerns about that bullet point. That, I have independent political views, which I think I'm free to express as long as I'm very clear I'm not speaking for the agency. And I don't know that I've ever disagreed with any of the agency's policies, but I would like to feel free to.
Yeah. Directors, if it meets with your approval, I think that these comments are very helpful, and I think that given that, it's taken a moment to develop this policy, how would you feel about us tabling this item for today, you reworking, incorporating the comments that we discussed, and recirculating that for consideration at our next meeting? How would you feel about that, Claire?
I'm happy to do so, Chairperson Sotelo. I would like to offer just a couple of other bits of information that might be of use. So first, to Dr. Imbassiani's comment about the oversight, sir, you're absolutely correct. And our statutes are all very clear about that, and I appreciate that nuance. I actually think that your comment adds quite a bit of value because you certainly serve an important oversight function. So thank you for that. And then to Mr. Starr, thank you again for your input. Mr. Hunter, Ms. Avila-Farias, under no circumstances are we interested in any way impinging upon your free speech and your ability to conduct yourselves as professionals in our industry and outside. So thank you for that clarification. Unfortunately, Mr. Starr, you spoke quickly, and I can't write as quickly as you can speak. So
that's why we should take a moment to.
Yeah, if your preference and the board's preference, Ms. Sotelo, is to table, I'm happy to return to the board at a later date with improved language, and it would certainly be very helpful if I could get verbatim, Mr. Starr, your suggestion.
Okay, so right now, I don't necessarily think that we need a motion to table, but why don't I go ahead and, in abundance of caution?
I'll move to table.
We'll move to table. Is there a second?
Second.
A second? Okay. Melissa, roll call, please, to table the item.
Ms. Avila-Farias?
Yes.
Mr. Cervantes?
Yes.
Dr. Imbassiani?
Yes.
Mr. Hunter?
Yes.
Mr. Starr?
Yes.
Director Velasquez?
Yes.
Secretary Castro Ramirez?
Yes.
Ms. Sotelo?
Yes.
Mr. White?
Yes.
The motion to table the resolution or the policy has been approved.
Thank you, board members, for your considered opinion on this and your time. Thank you, Claire, for your help with us, and we look forward to getting the final policy.
Thank you for your time and attention.
Absolutely. You guys have put me through the ringer today. So with that, we have an update, item number 12, update on our California Mortgage Relief Program. Thank you very much. We asked that this be brought forward to the board because there's just been so much activity, and we have been so, excited by some of the results. So here we are to present. Thank you very much.
Good morning, Madam Chair, members of the board. My name is Rebecca Franklin. I get the honor of serving you guys in two capacities, and I now get to meet you in person. I've never met anyone, so hello. I'm the Director of Enterprise Risk Management and Compliance for CalHFA. I also get the fun job of being the president of the CalHFA Homeowner Relief Corporation, a nonprofit that we obviously set up to disperse the mortgage relief funds and administer the California Mortgage Relief Program. So as Madam Chair said, that we wanted to give you an update of how the program's going. thus far, as of 4/10, these numbers are kind of, we have to do these things ahead of time. So as of 4/10, we've received over 10,000 applications. We've helped over 500 households, and we have about 130 servicers signed up to participate in the program itself. So what does that look like of the population that we're serving with these funds? Of the 530 households we've served, the average area median income is about 40%. The average assistance we're providing is around $32,590, and then 55% of those households are residing in historically socially disadvantaged areas. Operationally, we all know time is of the essence. When we kind of cultivated this program, we wanted to get the funds out and to start helping Californians right away. So we do close monitoring of kind of the average days of it takes to process these applications. As you can see from submission to approval, we're at 31 days. Declining and canceling, it's a little bit a faster process. So we're at 17, 21 days. That gives us an overall of 17, average of from submission to determination about 17 days. We are really working hard on making sure that those numbers and that commitment that we've made to Californians about being at or below 60 days between submission and determination, we hit that mark, and I think we're doing a good job at this point. Another thing is when we're talking about these relief programs, we don't want them to be cumbersome. We don't want to put the people out. They're already in a difficult position. We don't want them scrambling to collect documents or getting frustrated at the portal that we're using, et cetera. So we do survey all of our applicants, and thus far we have been getting really good feedback on the processes. So we have a 25% response rate, which if anyone works in surveys, that's actually pretty good. And so they, 88% of the respondents are saying it's easy to complete the application. They did get help from our contact center, which is great. We're here to provide full support throughout the process. Also that when they did reach out to that contact center agent, they were able to answer their questions. What is challenging, they may not have the right documents. Again, that's a small portion of what we're serving people the feedback. They didn't understand what documents were needed. They needed to find the right documents. There was some technical difficulties, but again, we have really good response rates on our contact center and able to get those people through, supporting them throughout the process. Outreach is a key component. We want people to know about this program, engage with this program, and ultimately be served by this program. So we are in contract with our intermediary community-based organization. That program fully launched in March, so we are seeing the fruits of kind of reaching out to communities. It's important to follow kind of the ERA model, right? That local partner network that they established. We want to do in-language, culturally competent support. And how you do that is boots on the ground, trusted resources in those communities, and the CBOs help us get there. Additionally, we have started to do proactive research. We've partnered with the servicer community for them to get the message out too. So being a trusted resource, a community, we do want Californians to understand this is a government-backed, there's oversight provided, that they're trusting the program, trusting the people that are behind this, and that they're willing to engage with us, share their information, get that support. So as of the last time I pulled the numbers, our servicer community has sent out over 170,000 emails to delinquent homeowners in their portfolio. Additionally, we are making outbound calls from our contact center, people who started an application, haven't finished, we've requested documents, and we've made over 10,000 outbound calls to Californians who've engaged with the program at some level, but haven't gone through the whole process. So we want to support them. We are partnering with our legislative counterparts. They're the ones that brought us these funds. They're the ones that recognize the need. The governor's office, the secretary have been, essential partners in this program. We are holding a lot of webinars and town halls as well. And then we have our media campaign, #GetCaughtUp. I don't know if you guys want me to read them. Some of the really, really good quotes that we've been getting from our survey. It sounds too good to be true. I applied anyways. I just sent a few documents and I was delighted to be able to be approved in about 30 days. Thank you for giving me hope. So these are really, really great feedback from our applicants. And I mean, it's nice to know, in affordable housing, sometimes, we have to struggle and kind of toil to get there. But I think this is also saying the larger part of the, CalHFA mission and the mission of these funds that, we really are helping people stay in their homes. This was difficult few years, and, you know, it's really nice to be part of the team that's bringing some hope to some of these households. Kind of future updates, I wanted to set an expectation of when you would hear from me and how often. The U.S. Treasury Department has released their reporting guidelines for the HAF funds, so we will be reporting to them quarterly. I will be submitting that quarterly report in your board item as an informational item and report, so you are obviously welcome to ask any questions upon that report. I will also come back and update this board at any large programmatic changes. There are some on the horizon. When we originally laid out the plan for this program, we said we're going to do this a data-driven approach. We're going to look at the market. What are the needs of Californians? It changes dramatically in the delinquency market, obviously, and we need to meet that need. And so we will constantly be growing, adapting, and offering different types of support to Californians as we help them kind of patch up, you know, what the pandemic may have affected them financially. At this point, I welcome any questions from the board.
Thank you, Rebecca. Before I open it up for questions, we do have an HRC board meeting next week. So if there are any questions or actions, or if you need additional information, you can certainly participate in that board meeting next week. So Director Velasquez?
Yes,
question?
thank you. That was a very good report. Thank you very much. Your numbers on the timeframes for reviewing, accepting, reviewing, approving are excellent. But if my math is correct, we're at about 5% approval rate. I would like to give you the opportunity to give us some reasons why is that low.
So our actual approval rate, we pulled the numbers, I think, earlier this week. We're at 17.3% of approval rate. And I know where you're going. When I shared the 10,000 applications submitted and then the 500 determined, we have about 4,400 in process. Mm-hmm. So those have not been determined. So our approval rate is actually, of the ones that we have determined, we actually are getting through and we are processing. So launching at the end of December. And so we will be tracking that, you know, kind of those timeframes on from submission to determination. We do that monthly, but the approval rate actually right now is at 17%.
Okay, so within the 17%, which so is it that those applications came in very recently, or are there other reasons? It's still 17. Again, your time frames for approving, review and approving are very good. So we haven't, is it that they're very recent, we haven't gone to them, or what is, maybe, there may be other reasons. And I'm saying, we get all these questions on the rental assistance side, and so we have answers for that, and the people are gonna look at the approval rate, right. Like whether that's increasing the speed to which it's increasing. So.
Yeah, so I think that when we first launched the program, it's obviously, as I said, it's much a shorter time frame to determine if someone is a decline, right? So we have been declining at a large rate. In the first few months of the program, the approval rate was below 10%, and it has been slowly climbing as we are approving more and more. So I think as we get more applications through, it does take a longer time frame to approve the applications. We're settling on a better, more realistic long-term approval rate. I will say the approval rate is low. I would say we were initially wanting to get into the 20% range for approvals. A lot of applicants, I can tell you the top 3 decline codes for the program right now are applicants who have applied who were not delinquent before the start of the program. There is this set criteria that you must be 2 mortgage payments behind as of the launch of the program, which was December 27th. That's our number 1 decline. Also, we do have the second most frequent decline is applicants who are requesting more than $80,000. We do cap the assistance at $80,000, and then the third is those who do not meet the income requirements. So I think it is quicker to decline the applications, and the approval rate has been climbing, but I want to set an accurate expectation that I don't think we're going to get a 50% pull-through approval rate. I think we're going to get around maybe in the 20s.
So Rebecca, just to illustrate your point, let's go back to the slide where you've got that 10,000.
Right.
I think if I can understand Director Velasquez's question, it's not so much about the number of days, but the percentage of approval. So if you could go back one more slide.
Sorry.
No, the 10,000, okay. So you've got 10,000 applications, 4,400 are currently being evaluated.
Correct.
So that leaves, what's my math, 5,600 or 50,
Yeah.
5,400 applications. Of those, only 530 have been approved.
Correct. So these are a different day, but around 3,000 declines, around 1,800 canceled. So those are all determined.
I see.
So there's approved, declined, and canceled, and those go into that calculation.
So of the 33, is the 18 a subset of the 3,300?
So declined is at around 2,900, cancels at 1,800, and approved per this chart is around 600.
Okay.
Is the 2-month delinquent per Treasury guidelines?
No, that is a measure that we decided to put on based on best practices when we were distributing the HHF funds.
So that was a policy decision made by the original board reviewing
Correct.
the program, and then when the nonprofit took off, and we just continued that policy.
Correct. So the term sheet and the plan was developed by the program itself, and then the HRC board has been presented with those documents and advised on them. And then U.S. Treasury, then they were all submitted to the Treasury. They've reviewed those guidelines and approved them.
Okay. 2 more questions, quickly.
Yes, please, go ahead.
Are you collecting race and ethnicity?
We are. It's obviously the applicant's choice, but we are collecting HMDA data.
Okay. Maybe like in the future, like this is great presentation, if you could add that would be great. And also the income range was very good, 40-something%?
The average AMI that we're helping right now is at 40% of AMI, yes.
Okay, great. It'll be, just to add a little more flavor, would be great to see the different income ranges, just.
Oh, yeah, I will present that. It's also available actually at camortgagerelief.org, that all of that information is on our public facing dashboard.
I haven't seen it, okay.
Yeah, we've started tracking that pretty early in the program, the last program. But all those, Rebecca, are very good information points.
Mm-hmm.
So when we review this at the board meeting the next week, we can report back to this larger board. Again, it's as CalHFA develops its own single-family program.
Yes.
This, the relief aspect of the HRC program can certainly inform about how we should design our standard single-family development program.
And then I don't know if Director Velasquez is in cahoots with the U.S. Treasury Department, but all of those items are in the Treasury reporting guidelines, and we will be reporting on them quarterly to the federal government, and that will also be included in your board packets as an informational item. And then again, I'm more than happy to answer any questions based on those documents.
Are there any other questions, Director Velasquez?
Just to clarify, I think I know the answer, but just for the rest of the members, how do you determine socially disadvantaged areas?
So we have defined historically socially disadvantaged communities through 2 different kind of data sets. One is HUD, the Qualified Census Tract. Additionally, we leverage the research with UCLA and the Center for Neighborhood Knowledge. I might have gotten that backwards, but they created a owner vulnerability index, and they take a bunch of variables into account. And so we're using the top 2 ratings, 5 and 4, for highest and high. So if a home resides within a QCT or within the highest and high from that owner vulnerability index, they are considered residing in a historically socially disadvantaged community.
And the operative term is socially, as opposed to just looking at the economics of it, which
Correct.
is interesting. And that lends to the equity lens of how we review it.
Yeah, and I should highlight for the board that if we do have 2 reservations of funds, so of the total allotment for California, this is not a Treasury guideline, this is a California guideline. We have reserved 40% of the total allotment to go to homeowners residing in historically socially disadvantaged communities. So I feel like I'm proud of us as a team, as, kind of a program that we've taken a step above kind of what the Treasury guidelines were, which is the 60% must go to at or below 100% AMI. But we said, no, we want to also reserve that 40% to socially disadvantaged communities. So.
And we're successful at 55%, so that's great.
Yeah.
Director
Yes,
Castro-Ramirez.
thank you, Chair. I just wanted to provide some context, and having worked closely with Director Velasquez and the HCD team with the rent relief program, just wanted to provide some context. So first of all, the data and the information that you've provided is really great. It's really important to bring more transparency around these programs, because this has never been done before, right? Where there has been this level of investment or funding coming from the federal government to the state. In the case of rent relief, $5.2 billion to the state of California, and more coming through reallocation. As it relates to mortgage assistance, just over $1 billion that is being managed by CalHFA. And I think one of the lessons that I've learned from the rent relief program is being able to create this level of transparency, and then also digesting the information in a way that folks can understand. I think it's so important, because we were so busy with rent relief getting the information out, building the network of local partner organizations, processing applications, doing all of the operations, that we could have done maybe a little bit more in terms of this level of information sharing. So I really wanted to just acknowledge the team for doing that. And then the second thing that I would say is that it is not easy to operate and manage something that we're building, or CalHFA is building from the ground up. So the questions and the adjustments that the questions today, I think, are very helpful, but also know that the adjustments and changes that may be coming forward are, some of them are being driven by Treasury, because this was also new for them. They've never operated, and provided this level of funding. So having greater visibility and providing, that level of information for all of us, right, I think helps us also in our own sort of respective roles when we're out in community, to be able to, one, help lift up the program, and two, know that the overall sort of mission and purpose of the program is not going to change. This is about keeping homeowners in their homes, but the more sort of programmatic, technical aspects may be changing. At least that's what we experienced in rent relief. It started one way and it sort of evolved. So all that to say that is that the conversation that we're having with regard to kind of the details is a healthy conversation, because this is the same, my assessment, this is the same level of conversation that Treasury is having across the nation. Like, what can we do to make sure that this program and really that these dollars reach those most impacted? This was a result, of course, of the impact of the pandemic, and we're still working towards getting those dollars out.
Secretary Castro-Ramirez, that's a very excellent point. I think that the benefit of having HRC be a nonprofit, standalone kind of organization is to have it be a flexible and nimble organization. So as we see that there is such a large denial rate or withdrawal rate, maybe what we need to take a look at the HRC is how do we adapt our program to more accurately, reflect those that we need to serve, right? Because while the program is new, having a 17% acceptance factor is not, something that programmatically is responsive to the need. So thank you for your comments. It's very helpful. Director Hunter?
Yeah, just a observation that it seems clear to me there's some institutional memory from the Keep Your Home California work. Because it took a year and a half to get that really functioning. And this is functioning in 3 months.
Yeah.
That's pretty impressive. But I think that's institutional memory, and part of that is the creation of the nonprofit to allow it to be more nimble.
Mm-hmm.
And just also by way of observation, it's very difficult. I don't doubt the difficulty of dealing with the Treasury Department, but would recognize that, again, like Keep Your Home California, this is us as a state taking advantage of some much-needed federal resources and putting them into very important households in the state of California. So thanks for being so quick at getting this going.
Absolutely. I'm sorry, Director Avila for this.
Yes, I'm very impressed what you've done within 3 months. All of those that launch programs in our professional space know how hard that is, and nothing's ever perfect. And I appreciate Director Velasquez and Castro Ramirez's comments to give more insight to the dialogue. And he dove into it so fast that I think he left me still at the diving platform there. So I just wanted to loop back on some of those numbers. So, you know, I guess I got lost on what's still in the queue that wasn't categorized into a bucket of review denial of just not touched applications. And I guess if there is a volume of untouched application, you know, is it a staffing, administrative, or just a capacity issue?
Yeah, so it's in process. So they're touched. It's not that, so we have very, very strict SLAs. When an application comes into the program, we have an eligibility specialist assigned and contacting that person within 40 to 72 hours at max. There's a level of review. It's not a process where it's just me looking at a packet. It comes in, I must send a file to the servicer. So one of the ways the program chose to minimize the burden on the applicant is we verify a lot of data points through the servicer. So we connect with the servicer. It's called through a common data file exchange. I'm not technical, but I think I maybe could go into a different profession after learning about that. But you go back and forth. It's basically we're trading information with the servicer. So we send what we call an information record. We have to get that response. We're verifying also income is a huge focus on what an eligible income is for the Treasury. That's a huge item, right, that for them. So we have to look at the documents that the applicant has presented. We may need more supporting documentation based on their circumstance. That applicant has 30 days to provide the additional documentation that we may need. So in process could be, we're waiting on the servicer to respond for information to verify the application. We're waiting for the applicant to upload information. So that's why we set the goal at 60 days. We felt like we could take ownership of, we can process these things within 30 days. We're taking ownership of our eligibility review and the servicer, kind of that information exchange, but we also wanted to make sure the applicant had that 30-day window to get whatever information. I want to assure the board the information we're requiring are bank statements, pay stubs. If you are in bankruptcy, we do ask for a couple other, so they're not, we define them as really easily available documents, but maybe that applicant needs to kind of work with, maybe their co-borrower isn't in the household or something, that we wanted to give them that window. So in process takes it could take a week. We've gotten, we do have an escalation process. If you have a notice of sale, we escalate you. So we've gotten applicants through in a matter of days, but we also could take up to 60 days depending on the circumstance of that application. Unfortunately, everyone is their own experience and their own circumstance, and we do try to treat them as individual cases as well. So that in-process number does look high, but that's why we do want to be transparent on that from submission to determination number and how that's looking.
Thank you.
Thank you. That was a very comprehensive
Sorry,
response.
I know it's the end of the meeting. I'm sorry.
So 4,400 people have been touched. Staffing is okay.
Yes, sorry.
I'm just teasing. No, it's fantastic, Rebecca, that you have such a depth of information. So thank you. Okay, with that, directors, we will continue to report back on the HRC because I think there's a lot of wonderful interface that we could have. And thank you very much, Rebecca, for that.
Thank you.
And everybody for your input. It helps the board at HRC really understand how we fit into the global picture. So with that, board members, you have two standing reports, the single-family loan production report as well as the update on the multifamily loan procedures. Are there any questions on those? Would you like us to pull staff to ask any questions of those reports? Okay, so with that, we'll go ahead and move on to our matters under the board's jurisdiction. If members have any items that they would like to bring up. Director Avila Farias.
I just wanted to share with my colleagues that I attended the Casita Coalition first conference they had in Oakland, and it was very well attended, and it's around ADUs, so it was really nice to see community members, elected officials, Nancy Skinner speaking in regards to further changing legislation to enhance the ADU laws statewide and obviously locally. And I think this is great partnership. CalHFA was brought up, and our community partners. I just want to, Tina wanted to say it's just great to see, of us being spoken so highly in the community, and you're doing a wonderful job with staff of really immersing yourself in the community. So we had a great presence, and everyone very familiar. And if you haven't attended or joined their Zoom, I think it's really beneficial. This is boots on the ground of community members really trying to come up with the best public policy around our housing crisis.
That's an excellent point, Director. I think that one of the things that I'm going to encourage us to do is maybe work with Melissa to do a calendar of events that will inspire directors to participate and represent CalHFA. Ms. Johnson Hall can't be everywhere all the time. So to the extent that we can avail ourselves of, or you can avail yourself of our assistance, I think we're open to doing that and representing both in Southern and Northern California.
Along with grand openings of
grand
buildings we
openings of
finance.
things, absolutely, yeah.
I know I've watched them in Contra Costa, and it's just been great to see them in my backyard. So.
Yeah. So if we can impose on Melissa to help coordinate that with Francesc and maybe a schedule of events that we can participate in, not just conferences, but events and representing CalHFA. So I think that's good. And then the second thing I would ask Ms. Johnson Hall is, can you provide to the board one-page cheat sheets on the various programs that we've now officially launched so that we can have at our ready disposal and be able to market it within our own constituencies and our own areas?
Just one page.
Well, one page for each program.
Small font.
Well, I have to say, I will. I'm happy to do that. And actually, we actually have something that the Director of Communications and Marketing prepared for me in preparation for the hearing that I think would fit your request and be responsive to your request really quite easily. So that is actually something. I'm looking at her. She's signaling to me. We're good.
Okay, good.
We will get that out as quickly. It is a wonderful piece. I do compliment them. It was very easy to sort of look at that and just see the progress that we've made. Wonderful. So well done to my team, and we'll definitely get that out to you as quickly as possible.
Oh, I appreciate that. Thank you very much.
And, Madam Chair, since we were talking about events, I just wanted to, if you haven't already seen on Facebook, Twitter, and other social media outlets, CalHFA did win an award that was presented to us by Innovative Housing Opportunities, and Madam Chair was there to support us, as well as Director White. It was a wonderful evening for me because my daughter also attended, and my daughter is doing her very first affordable housing underwriting. So it was so wonderful to have you there to support me, and I hope that we can do more events like that where we have board members there to support the efforts of CalHFA.
We are your tentacles. We will
Thank
be
you.
available. So with that, there are 5 follow-up items from today's, action items from today's meeting. Director Velasquez, we're going to put you on the spot at our next meeting to report on HCD's California-wide housing plan. We also have the policy follow-up with the report back from the Treasurer's Office, and how staff is able to integrate and address any concerns. We have the Code of Conduct policy that's going to come back to the board at our next agenda. And we had my request of looking at the policy objectives around the MIP program and how we can maybe, look at the success of the program and what modifications need to happen kind of moving forward. And I'm not sure when we would be available to do that, Ms. Johnson Hall, but it could be the next meeting or the following meeting.
Thank you. We'll work to meet that timeline.
Great. And then I would request that we do have a report back on the ADU program. Now that it is up and running and we have 12 people, let's see if we can double that up at our next meeting. No, but if we could get a report back maybe on the ADU program, that I think would be helpful for the next agenda. Are there any other agenda items that the board would like to see? And if so, feel free to contact either myself or Melissa in the interim, and we'll place the agenda items.
I was just going to add that, it's been a while, and we have not had the honor and the privilege of having another board retreat with our new executive director, so it might be something that we may want to consider in the coming months as she stabilizes.
Great, great. That's a good point. Okay, so with that, do we have any public comments? Any cards or anything that was emailed to us?
I do not have any comment cards, and I don't see any members of the public in the audience, so I would say no at this time.
Great, okay. So then, with that, it is 12:20. I'd like to call for an adjournment, and if there's no objections, we'll go ahead and adjourn. Thank you, everyone, for the robust discussion. We really appreciate it. Thank you. Thank you.